Hey everybody, welcome to the show. Let's see, my buddy Jack should be here any minute now. How we doing today, everybody? Everybody making money? Dun, dun, dun. Let's see. There's Jack.
What is going on?
What do you know, my man?
I know not too much. I know I got a lot of covered calls expiring soon. I wanted to go over today if we have time.
Yeah, I started rolling a bunch of stuff because I don't know, premium is just evaporating this week, and then next week's juiced up. So
Yeah,
I started rolling.
strange.
And I guess before we talk any trades at all trading involves a substantial risk of loss, and past performance is not really indicative of future results at all. And this presentation intended to be informational, educational, fun, entertaining, not a recommendation to be buying or selling anything financial instrument wise, including stocks, options, bonds, forex, futures, cryptos. We may talk about a variety of instruments. You might lose money if you trade them. If you want somebody to tell you what buttons to push, how to make money in the market, hire and consult a financial advisor. Otherwise, Jack and I are just a couple of dudes that get lucky and make money in the market consistently. So,
That's the exact best way to put it. Just a couple of dudes that consistently get lucky.
yeah, I had a couple stocks we could look at. I know you want to talk about your trades and stuff, but this one, picks and shovels for AI. Some of the stuff not getting the big headlines here. NVT. This is Invent Electric. I don't have a trade on it right now, but look at this. We bottomed out back here, Liberation Day. It's been on an absolute tear off of that, going from a low of 40 up to over 90. That's more than a double right there. Just absolute wild stuff. And then another one right here, VRT. They also provide infrastructure for data centers. This one went from a low down here around 52 up to a
Yeah.
high right now 164. That's a triple off the Liberation Day lows. And we still got more juice to go on both of these tickers right here. I just thought I'd point them out as alternate ways to play this AI revolution. These guys are printing money in the construction of the, $500 billion worth of data centers this year, trillions in the next 5 years. These guys are going to collect some income off of all that infrastructure build out right there. So,
Traded that one hard and heavy until Liberation Day. Well, until right before that. But I'm glad to see it's back. It's been off my sheet for a long time.
yeah, we're making new all time highs again. That's what you like to see.
I love it. What was the one prior to this one?
The prior one was NVT, November Victor Tango. It's Invent Electric. They actually make data center cooling equipment.
Yeah, I'm gonna get back trading Vertiv. That one was always good for me.
And these guys also make data center cooling equipment. Got this right here. It's a breakout, new all time highs
Like it.
right there. Potential to go higher. So this one finished my correction that I thought on Liberation Day and set up for higher prices.
Yeah. Now, when you see higher prices like this, do you ever think that you would want to buy a married put?
That's not a strategy that I care to do myself. I I just look for this dip, start selling puts, or do a credit spread in here, and then take it on for going higher.
Hmm.
That's
Good
it's
move.
usually that's my bread and butter things. Look for stuff with a pullback, a new trend established, a pullback gives me opportunity, and then I go after it.
Sometimes I do buy a married put just for insurance. If I
Yeah,
have, I wouldn't do it here, but like on something like part of my NVIDIA, it's just, my cost basis is so low in it that, and I know this is going to have some cooling off coming.
yeah.
So I like to buy a, uh, a married put here. I did it on ANET, just a couple that I want to kind of ensure the profitability. So guys and gals, when you buy a put for insurance, a married put, you would buy a 188 strike price put. for, let's say, a month out. And if NVIDIA comes down from 188, even if you don't have 100 shares, even if you have just a share, the value of that 188 strike price put is going to soar in value. So that's why I like to do it. But I don't do it on everything. I only do it on stuff that is super lofty and way over my cost basis, and I want to buy insurance. Now, if NVIDIA just doesn't go down or goes sideways or goes up, then I've lost 100% of my insurance premium.
Yeah, it's one of those things. Me personally, the way I've been most comfortable doing it is, I know this isn't for everybody, but I like to book out profit and just reset the risk on a trade. Usually when you're, when you've got a share position and you're riding it and you don't want to book the capital gains, that's a different story. But a lot of times when I'm riding one up and I get way over my cost basis, I'm sitting on, you know, hundreds of percentages of profit, you know, I'm risking all that profit plus the original stake. Usually I'll just book it out and reset it back to a reasonable risk level tolerance that I'm comfortable with. Take that extra money, deploy it into other opportunities. That's historically how I've, been comfortable trading. There's different styles for everybody. That's kind of my personal style.
Mhm. Look at
So,
that little story down there in the lower right corner. That's such a joke.
yeah, yeah. I don't know. I think Oracle's probably going to fill that gap that we did. As
Yeah,
my personal belief on this thing.
I agree 100%, and maybe even lower.
I
That
think we're going to pull this back down in this area.
the bloom is off the rose here.
And we'll see. It's repeated right here. That same story about Barron's.
Yeah, that's what I'm saying. Of course they're going to say it's no problem. They're leveraged to the hilt.
Yeah, I mean, hey, if you're the one borrowing money, everything's great, right?
If you're the bank too, you're going, oh yeah, everything's fine with the loans.
Jack, I want to tease something here as we get started, and then we can talk more about it here after a while. I have this system I've been working on. We're going to talk more about it on Sunday, you and I. Here's an alert for today. This came out at 10 a.m. this morning. It's already late in the game. I actually missed it myself, but it gives you a credit spread automatically, good for one day out till tomorrow, and gives you the credit and the close target for 50% of the credit. Tells you your risk. If you want to risk $1,000, it tells you to do 14 contracts. Gives you that whole thing automatically.
That is a fat spread. Was that 2 cents on a dollar?
Yeah, that's a dollar spread, 32-cent credit.
That's a 32% return.
Yeah, and
Wow.
we're gonna capture half of that, and so that's actually 23% return on the risk. So your risk is only 68 cents in this thing, and not a dollar. So it's even fatter.
Tomorrow?
Yeah, that's for tomorrow. And so this system prints these out 1 day out, 1 day spreads. So they're not day trading; they're 1 day out, and it pumps them out. And so far, it's pumped out over 454 of these this year. I mean, 254. Excuse me, 254 of these this year, with an 89.7% win rate.
Now, so they're all for the next day's expiration?
All 1 day out expiration.
I haven't seen this, so can I get it first?
Absolutely, Jack. Absolutely. And this is just amazing. If you had put $1,000, just $1,000 on every trade so far this year, this is the kind of profit you could be sitting on right there,
Barking up my
potentially.
tree with credit spreads, baby. I love those like a fat kid loves cake.
Yeah. So if everybody here wants to know more information about this, get registered to come with Jack and I this weekend when we go through the entire thing. I'm going to throw a link in the chat here.
Yeah, I haven't seen the entire thing, but what I've seen already, I know I want it. So we could just cut to the chase. How do I
Right
get it?
here. Right here. We're gonna you register for our event. Jack, I'm gonna give you early access, of course. And for everybody else, Sunday, Jack and I are going live at 1 p.m. Eastern time, and we're gonna break down this entire system and give everybody an opportunity to get a piece of this thing right here with the live alerts. How's that sound?
That
I
sounds
mean,
amazing.
So I wanted to tease that off before we got into anything else.
Wow.
But
You got me so sidetracked now by seeing that. I'm going to be losing sleep over this thing. Never
and
seen
get this,
my-
Jack. This just happened. This just now happened. Yesterday's alert right here. This one came out at 9:30 yesterday. This just now closed like moment ago for 50% profit. Let me pull this up. I'll show you the platform right here. It's just closed. Look at this, 11:40 a.m. right here today. Just closed, 50% profit. That is live right there. So does it work? Yeah, it works. There's the
I'm looking forward to it too, Andy says. This is right up my wheelhouse, man. You know, I love credit spreads, but I don't do them like this. And I love automation and I love track records. I love win rates. I love that because I'd rather take a lower return and a higher win rate, but you don't even have to do that here. You could still get a high
yeah.
return and a high win rate combined.
Yeah, I just made, I actually got filled for 30 cents yesterday instead of 32.
It's
Just
insane.
closed it for 15 cents. So that was I kept 15 cents per contract. And
So that's 15% in a day. That
that was
should
pretty
be illegal. I'm gonna have to look into this.
It's pretty sweet. It's all automated. You just, I know you love those kind of trades where you put the exit on right after you get in, and that's exactly what you do on these
Why do we
trades.
gotta wait though?
Why do we gotta wait? Because I mean, the release of this thing is special, Jack. I've got a few more little tweaks I'm making in the background. We got to get everything ready. There's a
You-
training video that I
I
haven't
don't
uploaded yet, and
I don't like teasing. I see it and I smell it and I want to eat it. I want to eat it, right? So
yeah. Well, Jack, I'll give you access later today, but after we get off of here. But for everybody else, sign up for Sunday. We're gonna go live, and that's gonna be Jack's last show there in Colorado before he heads south for the winter.
yeah,
So,
yeah, my last show. Well, no, Monday. I'll be here with you Monday, and then I'm
okay.
gonna rip out of the cabin and off the ranch and see if I can make it to the airport.
All right. I didn't know if you're leaving early or late.
Monday after our thing.
All
Yeah,
right.
he wants to know why do you like credit spreads? Well, I'll tell you why I like them. Mostly, Lynn, is I like to get paid up front. That's an income trade, credit spread. When you put that trade on a credit spread, you get paid instantly. I like holding on to the money. The other thing I like about spreads is the price of the stock doesn't matter. You can get into any spread. The only thing that matters on your capital requirement is the difference between strikes. So it's $100 it could be for one contract like that. They're low cost to get in. The returns are super high. The risk can be really low because you get to decide what strikes you want. And it has a built-in hedge. If everything goes to the hand basket, you're long one side of an option here, and that hedge can be amazing.
So let's just break down this trade. Right here is the trade that took on the screen right here. It's my same technical analysis pattern. I've actually customized the actual algorithm just a little bit to tune it for these particular trades. There was the high, there was the low. Here was the entry right here. Now, why a credit spread? If we had just gone long, and if we had played a 0 day yesterday, it would have ended up a loser right there yesterday. Here's the entry. Here's the end of the day close. That's below the entry. That not great. But with a lot of work and a lot of effort and a lot of things to try to up the win rate and taking in a lot of feedback from some other subscribers and a lot of back testing by the German team that we have that back tests all this stuff for me. We found out that if you take a high probability pattern and you apply this particular credit spread with 1 day out options, we can
Instead
take
of
that
saying
we can take that normal 75% win rate and boost this thing up to 89.7% win rate. This is very similar to like how your Tesla thing has the green light and boosts the win rate up even higher. This using this particular trade in an optimized way, boost that win rate up. And now, instead of taking a loss at the end of the day today with the 1 day out options, I just booked it out for 50% of the credit
that's
right
really
there.
that's really smart because you most of the action is going to happen overnight, right? In terms of what the change is going to be on the underlying asset. So by giving yourself one more day, uh, you really put yourself in the catbird seat. That is a brilliant strategy. Zero DTEs can be tough on an intraday basis, but this is great with an overnighter. One day, yeah.
It just optimized it up the win rate just a little bit and gave what it does is it gives you a little time too. Like instead of having to be right there at your computer, it gives you a little time to get into the trade and
And
you
out.
know and
Yeah.
out of the trade. Yeah, that's kind of the beautiful thing here is it all just kind of works. So
Yeah, you're doing it on any price thing. What about assignment? Does this what do you think about
there is assignment risk, and I do it. Full disclosure, I did take a loss yesterday on IWM that I got into on Monday. Um, this does trade the three main indexes because they have 1 day out options on all of them every day. And yesterday, Monday, I got into this trade, and yesterday, you know, if you didn't know, it was a down day for IWM, and it ended up late in the day. I was down, couldn't do anything. It did take a loser. So that does happen about 1 out of every 10 trades.
Yeah, and that's the thing. If you've got that 89, 81, anything 80s, close to 90s win rate, you can take that to the bank. You just got to stick to the system. And
Yeah.
that's where a lot of people get messed up. They'll try something new, it doesn't work, maybe on their first trade, and then they're out forever. And that's not how it works. You got to kind of have confidence in that win rate. That's your conviction. That's why you're doing it. You got a high win rate, and you couple that with a man, that return is. I want
Yeah.
to.
The profit factor over the last basically 9 months of trading this, the profit factor has been like 2.6. So
It's still.
you make $2.60 for every $1 you lose.
Thank you.
So you do take a loss 1 out of 10. A lot of people when they trade credit spreads, usually the risk to reward's all messed up and you lose 5 for making 1. You got to win like 10 times and you take that one loss and you wipe it all out.
Yeah.
Well, the way we've optimized this, it changes the game quite a bit. And we win 9 times and then lose once and we're still ahead. So,
And when you lose, it's not always the end of the world, right? You can always get out of these credit spreads early. You may have to give back all your net credit. You may have to give back some of it. You may have to give back all of it and some of your capital. That would be a loss. But you can set these things up to where you can get out pretty close to break even if it's not working. Or you
you
can
know,
just ride it out all the way because the most you could lose is what you have in the trade. So
I was going to say that the thing was yesterday when it opened, I had the opportunity to close it for a small loss, if a loss at all, maybe break even. But then as the day went on, it actually dropped out. And then by 3 o'clock in the afternoon, I didn't have many options left. Little joke there, options humor.
I
But
get it.
so by late in the day, I didn't have didn't have much opportunity. And I'm live first thing in the day, so by the time I was no longer live, it actually was already underwater, and there wasn't a lot I could do. It just came down here and parked for the whole afternoon.
That's going to happen. That happens, right? But
Yep.
you got great stats here.
So this will be available on Sunday, like I said, and I think I threw the link into the chat. So let me grab that one more time. The chat just for the host and panelist. So let me throw
I want
that
to make
out
sure
for
I get
everybody.
mine on Sunday.
There we go. There
I'm
we
gonna
go.
be jumping on it on Monday.
Yeah, so typically I don't trade credit spreads, but this is I've traded hundreds of these in the last few weeks. Or actually we put this live for my insider group in July, and I've been trading, gosh, I think I've got almost 100 of these on the track record that I've done.
Yeah.
And they just kind of work. So normally I don't like it because you get into one of these, you get 10 cents credit, you're risking like 3, 4, $5 to make 10, make, and it just, the risk reward's all messed up. But this trade, I've kind of figured out how to optimize it with the help of some really smart people in the background,
I,
and just flip this whole thing around.
Those are the same cats that help me. They are some smart dudes. I am so impressed with their work.
I was actually going out of the money with these things. Let me bring up a platform. I'll tell you how I started with this. And I was going out one day, and I was actually coming out here kind of one standard deviation away from the money. And I was doing my credit spread. You look at that, you get 12 cents for, roughly 88 cents risk. That's kind of goofed up when you look at the risk reward. So if this goes against you, you take a big loss, 88 cents versus only if we're trying to get half of the credit, you're looking at making 6 cents, $6 to $6 gain versus 88 loss. And they were like, whoa, 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 whoa. If you look at the numbers, when you pull this up to at the money, this is not a real trade. But if you do this, now you're up to 33 cents right here, credit on the entry. Your risk is way down at like 66 cents, 67 cents. And you're going to capture half of that. So 15, 16 cents profit, $16 profit with only a $66 risk. You're way changing the risk reward right there. And
Well, I think there's more to it than always just risk reward. There's also probability.
yeah, and that's what they looked at. They were like, when you play this, when you're playing out here and you're playing up here, you don't really change the win rate at all. The ones that don't work tend to be like the IWM one yesterday that doesn't work. Like it doesn't work from the start. It just fails. A few of my insider people have been like, well, how can we cut those out? I haven't found any way to just cut those out at this point. It's just part of the game. It's part of the cost of playing. So, um, that's
Well,
just the way it is.
I'm gonna have to stop talking about this because I'm gonna write down all my questions for Sunday. And if you got any questions you want me to ask Jeffrey on Sunday, save them for Sunday. And then we'll do them after the presentation, but we'll answer all the questions. I got a bunch of questions already, but I don't want to get too far into the weeds on this yet, my man.
Yeah, I mean, it's just crazy. I mean, the average loss is like 97%. And no sugarcoating it. When they lose, they lose.
Mhm.
Yeah, I've warned some of my insider group. I was like, some of them started going really big because it wins a lot and gives you high confidence. I'm like, dial in that, pull your risk back because when they lose, they're gonna, all your money's gone. So you got to stay in the game, and you know,
Gotta stay in the game. Yeah, and that's allocation, how much capital you're putting into the trade and how you're managing it. And we'll talk about that. I got a couple tricks I want to run by you on Sunday after the presentation about
yeah.
managing trade.
And so, I mean, it costs nothing to go sign up for the presentation. I'm sure Jack and I'll be talking about this more next week too. And it's just something cool. I've been working on it for months. Everybody wants to know how to get these, and some traders love to dive in and learn how every little bit of it works. But some of us just like to go fishing. So basically, with this trade, I'm gonna take you fishing with me. I'm gonna give you the bait. I'm gonna tell you where to put it in the water. I'm gonna tell you what we're fishing for, and 9 out of 10 times we're gonna pull out exactly the fish we're trying to catch.
Yep. Yep. I like that. This is not a discretionary system. In other words, it's a algorithm running this, right?
Yeah, algorithm, and it's all set up like there's no what if you did this or what if you did that. It's all been optimized to death basically already. And like I said, we've worked on this a lot. This isn't just me talking about it. Like every time
It,
I get off of here, I've been writing the code myself. I've coded all the pieces myself. It automatically even logs it on the log. This is a feature I added this week. Is it actually puts these in a Google spreadsheet with the live entries and performance and everything. So
it's
you can say
awesome.
like, is there assignment risk? Well, yeah, but 1 day out options don't usually get assigned. So that is a possibility, but it's not. I mean, it's like what's possible. Could the market go to zero tomorrow? Sure, that's possible. Is it very likely? No. Could I get a sign? Yes. Is it very likely? No, it's not. So what if it comes late in the day tomorrow? You got in one today and it comes late in the day tomorrow. You're gonna have to do something. You're gonna have to close it if it didn't close automatically. So there is some got to take action things. Some of your credit spreads, Jack. You look at it down on expiration day. Do I need to take action, or do I just let it ride? Just let it cook, as you say.
Well, the reason I do that and the reason you can do that is because of the win rate, right?
Yeah.
If I'm at 96% or 97%, like today, tomorrow, I'm not going to do anything until Friday, and then I'll take a peep at it and see, do I got to make a move? But like right now, I'm in Nvidia. Credit spread expires Friday. That's 177.50. I sold and I bought the 175 put.
Whew,
So
you're way out of the money.
but I wasn't when it started. It's just that this thing, yeah, I'm way out of the money, and you could have got closer to the money and made twice as much. But yeah, I'm way out of the money, and that's what I like. I like not having to sweat it. So it'd have to take a real big move here from today till Friday to bring it down. It could happen, but like statistically, 95%, 6% of the time, it doesn't happen. So that's what you're going to have with your trade too. I wouldn't sweat your trades. I'm going to put them on. I'm going to use
Yeah.
that.
So the whole thing is my underlying algorithm is sitting there looking for like a move that's going to be like a 1% move, and it works 75% of the time. And then we're putting a credit spread on it that can win no matter if we go sideways, which wouldn't win, goes up, which would win, or down slightly against us, and it still wins. And that's how we take the win rate and go from 75% up to almost 90%. It
Exactly.
just it just you know it's just the way it works. It blew my mind. Like I hadn't sat down and actually done the hard numbers myself. I just was going off my gut feeling. I was like, I need to be further out of the money to provide that downside. But it turns out that I didn't need that extra downside protection, and I could go for more profit on the trade.
Love it. I love it. Yeah, Dennis asked with trend point. I start at the short-term trend point. If I can get something down below there, that's where I'll start to look for strikes. Then I'll work my way up if I have to. But that's doing it manually, Dennis, and that's what I was saying. That's hard. I've got something similar to this, totally different application, but it's automated. It runs off an algo, so it can do in 1 second what would take me 20 minutes, right? And I'm sure that's what this thing, it's going to spoon feed you the cream of the crop, Jeffrey's thing is. So that's the benefit to me. If you have an algo basically with a win rate that high, I don't want to do it myself. It takes too long, right? The phones are ringing, just it's a hassle. So now with automation, what they're doing is they're just taking that strategy out of your head, right? They've
Well, I took it out of my own head, and
no, no, they put it in the code, I guess, and like that's what they did for me. They asked me all the details of how I do a credit spread, and that thing just picks it for you now, and that's what I use, and I can't wait to use what you have because I don't have anything with this sweet spot of high return ROI and high win rate and 1 day out. I don't have
yeah.
any. That's awesome.
So if you look at how many trades it's had, it's on average a little more than one per day. Some days, well, last week we had four in one day. Some days it has none. Today it had one so far, and so it's just one of those things that it's there for you, and it never forgets to throw out the alert. It's all automated, so it's beautiful. It's beautiful, is what I have to.
I love it. So
Yeah,
yeah,
the link to the sneak peek one more time. I'll throw that in the chat one more time for you right here. Should be jeffreytrader.com/CB for CashBot. We're calling it the CashBot because it's kind of like an ATM. They wouldn't let us call it an ATM, so we're calling it the CashBot. It just throws out these credit spread cash alerts repeatedly.
yeah, it doesn't do the trades. It just sends you the alert, Bodine, right? Yeah.
Yeah, we we don't have the approval to trade for people yet. That's in the company process. I'm not sure we're going to get there, but Um, if and when I figure out how to up that code so that you can just make your, run it on your own computer, we'll get there. It's kind of in the back burner. Several people have asked me for it, but then you got to trust the machine to do it for you. I like to have a little skin in the game myself.
What you do with that auto trading is you just fund the account, right? And then you set it up so that the trades get done automatically. It
Yep.
can work. When it works, it's the best thing in the world. When it doesn't, it isn't. I did it with crypto several times. I had bots running, and when it was working, it was great. When it didn't, it didn't. Wasn't tested out nearly as good as yours is. So I love this thing. Auto trading may be next up.
Well, we'll see. It's been in the plan for a couple years. I have to fully trust it. I actually got my start being I was the cats. I was the head automated trading uh, systems person for another guru before I became a guru. So I was the chief automated trading systems person in their enterprise. So
Yeah,
uh, and yeah, we called me the cats.
yeah,
So
that's funny.
Um, so I've been doing this for more than a few years, these automated trading systems. So I know a little bit about it by this point. And yeah, I know how to fake some backtest data. I know what's real. So it's one of those things you learn along the way, I guess. All right, Jack,
Yep.
you had a couple cover calls you
Jojo,
wanted to talk about?
I do have a thing about that, Jojo Siwa. Yeah, I do have a system that picks the strikes for your credit spreads. Doesn't
Uh,
use deltas, but I got that. We'll get you a link for that later. Yeah. All right. So let's get to my credit spreads. I mean my covered calls.
yeah, cover calls.
I got about 14 of them.
All
I got
right, that's a couple.
say, well, we got Nvidia up here, so I got the one. I'm sold the 190 strike, the 195, and the 200 on Nvidia.
So why did you tier them, Jack? Can you walk us
Uh,
through?
yeah, I tiered them because I have maybe too much of this. I don't have a balanced portfolio, and I tiered them because if I do get called out of, I don't want to get called out of it all at the same price. And if it's going to run, I want to try to catch this piece in here between 190 and 200.
So that's you basically got them stacked up right through there,
I'm
and we're
stacked.
trading just below it.
Yep. Yep. Uh, yeah, I
And
got that. Okay, so it's just below it. If I get called out, I get called out. If I don't, I don't. If I do get called out, then this is for the 17th of October. Then that following Monday, I'll just buy it back. Um, I got IBM. I sold the 305.
IBM, and just to Stephen, interesting to know. I know how to fake the data. That helps me look at other people's stuff and know when it's complete bullshit.
Seen that?
I just just that's how I learned how to do it. Was I go my weekend usually looks like I go read some articles on Medium. And they post a lot of there's a whole section of that where they talk about algorithmic trading and these algorithms, and people are like, I found the holy grail, and then I'll go code it myself and figure out how they bake their numbers to make it look like the holy grail, just for clicks and eyeballs and reads. And people make money posting stuff on Medium, and um, you know,
It's
so
interesting you say that. The folks at home should know that when we have our third party auditor audit the system for the win rate, that's done by another company. And they get so detailed about it that a trade would have had to have executed at the price you say the trade was at. You can't just say, I see a credit spread here, and maybe it couldn't be possible to actually do that trade. That's where our third party auditing comes in. They really look at it. And I know that because I got to give them my personal trade, right? To tell them what I got executed at. So
and
yeah, it's all real. And
And
no,
our legal department always wants me to give them all my brokerage statements. I've got like a Google folder I just drop them into these days.
crazy.
All right,
Yes.
what'd you do on IBM here?
Well, I sold the 305
305, right.
on the 17th. If I get called out here, it's been on a rip. I'll buy
Right
it
in
back if I
there.
get called out. If I don't, I'll just do it again at a higher strike. I got AVGO, the 400 and the 420.
Ooh, that's way up there.
Yeah, isn't it?
400 way up here.
How that thing
And
gapped and ripped, and I this thing can still go. It's got 500 written all over it, the way I see it going. And
yeah,
then Microsoft, I got the 560.
yeah, I think we could be good for 565. So be careful on that one.
Oh, well, if I get called out, I get called out. I'll buy it back. I got a really low cost in it. I'll take it. It's in an IRA. XOM, Exxon Mobil at
Oh,
120.
120. Yeah, that's pretty far up there actually.
It's looking good. ANET, ANET 165.
Yeah, that'd be a pretty lofty move too,
Be a
right
lot.
now.
I'd rather not get called out, so I'm picking higher strikes here. Got Goog at 250. That may be
And we're right on that, right on it.
take the
Right
call
there.
out because it didn't fill in that gap. And if it wants to break out again, let it. So I got that going for me. Hood 155. I don't want to get called out of Hood. So 155. Where's Hood? Yeah.
Sit at 148 right now. So
All right. Dang, that's
you got a little room, but not a lot of room. If we get another big update, you might be losing that one.
and IBIT. I've sold the 70 and the 72, and I never got put on my 63 naked put.
Seven,
So
70's right at the money there.
7,
72.
and that's good. I got way too much of this.
Yeah, we were actually up to 72
Oh,
two days back, but now we're back down here at 69.
a naked put at 63.
And just, I did have some of this down here at 64.50, and I was selling tons of puts against it to try to get a little more. I never got any, and I got called out on this pop at 66. I had a 66 sold against it. I'm just off of it for now. I'm gonna wait for it to chill out and pull back again before I touch it. So that's just me right
I'm
there.
still long and strong. Then I got the TSLL naked put at 20 and the KWED 4550 debit spread.
Yeah, I just rolled all of my TSLL forward 1 week for a variety of credit. I got up to $1 credit for going one more week out. I just thought that was wild right there. But I've got one chunk in one account was 19 puts sold for next. Now it's sold for next week. It was sold for Friday. So I've got, and then I think my mom's account, I did 12 of these contracts. And then my dad's account, I did like 5 more. And then another account I had, I did like 6 more. So I'm riding a few dozen puts on TSLL, all right here, right around 19 and 20.
Nice. Yeah, it's been premium income heaven. I'll tell you, this is most on a percentage basis, highest premiums I think I've ever brought in.
And Jack, I had somebody ask me an interesting question yesterday. I do a 5 o'clock show on Tuesdays where I let people ask me questions, ask me to review charts. And somebody brought up an interesting point that I thought would be good for us to break down right here. We've been talking about the opportunity present on Tesla and the ability to trade TSLL for even more premium. Now, we go look at Tesla and look at the beta here, 1.8 essentially, right there. And we've been talking about how much opportunity there was on TSLL with the 2x leverage that provides a beta of 3.6 right here. That's pretty juicy, pretty darn juicy. And we were talking about Circle, and the beta on this one already 3.4. And then we we were pointing out this trade right here, Circa. Look at the beta on this thing, 25. That, for a 2x leverage, that didn't just multiply it by 2, that multiplied it by like a lot, by like 8.
Well, that's because the underlying, yeah, that's crazy.
So there was ridiculous potential on this one and on TSLL. Now, I had pointed out Lilly was on a breakout and potentially set to go higher. And I actually put out a trade on one of my services for this going higher. And I was using the leverage ticker LLX. And somebody asked me if you could do the same kind of covered call, sell a put strategy on that one to take advantage of the same kind of move. Now, here's the thing that I thought was particularly interesting was when we look at the beta here, it's only 0.32. So first off, probably not the best stock to be trying to do premium trades on. But we do have a potential directional trade. Now, when you go to LLYX and we look at it, compared to some of these other opportunities we've been pointing out, while the beta is over 1, that's still kind of low for the kind of move that Lilly might make. This could make Lilly could make a devastating pullback again, and this could go back and make a lower low. So there's very high risk here, and you're not really getting paid appropriately with only a beta of 1.3 right here. So this one doesn't necessarily have the same kind of opportunity to go after it. This is not like a universal thing. Like you can just take these underlying stocks that you think are going to go bullish and then go find a 2x leverage and play the covered calls on them. It's not always universally a great opportunity. All right. And this is one that, in particular, that I didn't think was a great opportunity to come in here and try to sell premium on this. But it is one of those that I did buy shares of this right down here. And I'm looking for cashing out right up here around 24. But I'm not looking to do covered calls or sell puts. The risk that this goes against me is very high. I have a small position priced about like what I would put in options, except I didn't have to worry about time frame or expiration dates or strike prices or premiums or anything like that. So I just bought shares, looking for that move up to about 24. All right. Jack, if you have anything to add to that, I unloaded a whole lot of stuff there.
Well, sometimes you just want the directional action rather than an option play, right? That's just how it unfolds. This looks like it's going to do what you think to the upside, but there just doesn't, and then that's a good profit, but it just doesn't look like there's much in the options market for it. And that's sometimes the case.
Yeah, and then I think it kind of stems from the fact that this has a 0.3 beta instead of, something bigger than
Yeah,
1.
that's totally the case, but that doesn't mean that it can't make a big move, right?
Right.
This
Right.
is poised for that. So yeah, it's a different way. It's just a directional trade. Um, no expiration you don't have to worry about, stuff like that. So yeah,
And let's see, have you seen the 17 MIO? I'm not sure what MIO is put in Microsoft and 17 MIO put in Google, both expiring
I don't know what that is.
30 days. I'm not sure what MIO is. Million. Oh, I mean, there's 154 million in Tesla calls. So, I mean, it's like, yeah, there's big, big gamma levels and big stuff out here. Kane is an expert on gamma levels. And
I still don't really get it, but it's something.
I,
Dennis asks on covered calls, do I buy some of them back on Friday and roll them out? The only time I would ever buy a covered call back is if I didn't want to get called out at a strike that was below my cost basis. Otherwise, I let them expire worthless, and then Monday is my next cash flow day. Yeah, it doesn't surprise me there's a 17 million put in Microsoft and a 17 million put in Google. Um,
I mean,
could be insurance as well.
yeah,
They
that's
could
a,
put just to ensure the gain. This is what I'm saying. You're going to see a lot of this happen, and it's not necessarily put by an increases because people think the market's going down. The market's at all-time highs. If you want to ensure this gain, The only way I know how to do it is with a married put. So that's why you're seeing a lot of that. I wouldn't I wouldn't take from this that they think it's going down.
So just breaking this down for you, for everybody, Microsoft's made basically, for all intents and purposes, $180 move up, right? And you go look at how many shares that is. 7.3 or 7.4 billion shares moving 180. I mean, this gets to be insanely large numbers that we're talking about.
It's exactly
So,
like if you're sitting on it, if you're a fund, right? You want to insure this gain, man, because that's massive.
we're talking about, 7.43 billion times $180 a share move up just in the last couple months, right there. That's $1.3 trillion of gain.
Yes.
$1.3 trillion of gain between from this low to right here. You don't you're telling me that somebody wouldn't spend 17 million to
That's right.
protect part of that?
And the other thing is every hedge fund owns Microsoft,
That's
right?
that's pennies compared to
Exactly.
1.3 trillion with a T.
Yeah, it's like auto insurance with no deductible. The thing gets crashed, you're getting paid 100 more than, right? And that's the thing about the put is it's 100, one option, it's 100 shares. So the leverage you get with that is awesome. Um, yeah, I'm not surprised. I don't think they're buying those puts because they think it's going down. I think you'll see a lot of put buying on stuff near all-time highs just to buy the insurance.
And that's the thing about it. It's not necessarily a directional trade. Especially, I usually tell people to put this in perspective too. If you come in here and you see $1 million call buys on Nvidia, Microsoft, Apple, Google, when they're trillions of dollars of stock, you've got big players that are fat with cash that can afford those kind of plays. When you come down here lower in the rolls and you see somebody coming in and buying the same size position in IBM, that's a red flag.
Or a green flag.
Or a green flag. If they're buying a put, it's a red flag. If they're buying a call, it's and it looks like it's a call because it's going through at above the money or something like that. These ones further down in here don't have big orders that come through all the time like that. And you go under 100 billion, and these flags get even more prominent. And the site has so many ads on it. But you can come down here, way down in the list, and when you get way down in here and you find big orders, then it definitely somebody might know something. And that
Those are the
there's
ones
a
when Lance has those and they're on stocks I've never heard of, under 20 bucks. I like that stuff. And that's movable. You could do whatever you want in one day on Apple. You're not going to move that thing a dollar, right?
right.
Apple won't move. Something like this, you could push this, you could take control of this. That's nothing. Some hedge funds are bigger than this, right? Imagine what they could do.
Yeah, like Nvidia adds this much money to adds it or subtracts it from their stock every day. So that just to put that in perspective for people, some of these companies could be scooped up in a buyout in just a blink.
Yeah.
And that's how I call it the law of big numbers. When you're sitting up at the top, you're in the top, 4, 5, 6 with $1 trillion valuation. It takes trillions of dollars to double your stock price. When you're down here, like Spotify at 139 billion, what does it take to double the stock price?
Not much.
139 billion. That's like $6 move on Nvidia
Yeah.
to double the price of Spotify. So I usually hunt for the opportunity down here in these lower market cap names. And that's why you don't see me chasing after the Googles, the Microsofts, the Apples with all my trades usually. I usually am looking for big upside.
Yeah.
hopefully that helps everybody kind of understand.
Yeah, market cap plays a big deal in how much can it move.
You look at Microsoft, it's like, yeah, it did run up that much, but it didn't double. And it's because the market cap's sitting here at $4 trillion, and it takes $4 trillion to double it. We made a $180 move up, and it was 1.3 trillion, but that's still, it was like a 50% gain. And it took it a while, and it took a lot of effort out of the market. Now it's tired. It doesn't have more money. It's run out of buyers. So
Yeah, that's a fact. Apple too. I read where they're going to pick a successor to Cook. Going to put a new jockey in possibly.
and see, Microsoft's sitting on some debt too. Whereas you look at Apple, and they're sitting here relatively debt free compared to how much cash they move. They do have some debt, but they've been settling it. Then you look at other stocks, and like Nvidia, it's just a cash machine. Their debt underneath their free cash flow.
Good jockey.
Good jockey and knows how to manage a wallet. So
Got to up that dividend if he wants to make Jack happy, though.
yeah, paying a penny. Yeah, that's a pittance right there.
That's I think it's 9/10 of or I don't know 2/10 of a percent or
Yeah, something ridiculously
there
low.
it is 2/10. Come on, Jensen.
All right.
Speaking of high flyers, now you know I'm still nibbling and building my position in Circle,
Yeah.
but I didn't tell you that I'm doing the same thing in Fig.
Yeah, I've heard a little bit about Fig.
Yeah, look at that.
Nice big candle today.
Oh, now I've been nibbling down there low. I got a little profit in it, but I don't have much stock. So I filled in that gap right there. Yep, filled in that. So we'll see what happens. Another little pullback to 57.50 and then a rip. Or
I really like this because we IPO'd right up here, and we did make an initial run higher, just probably on the excitement of it coming to market. But then it did like almost every IPO, 95% of them, and it made this low down here. And as you say, that means that the company probably got a pretty good deal on their stock offering
they did.
right there. Initially, it was kind of sketchy, but I think it was all excitement and hype and hope. But then we went down and found a reasonable base price to move up off of. So this could go bullish from here. I
It
don't really have any qualms with this at all.
has a
The circle chart, does have downside risk, but this one potentially made that real value bottom right here.
maybe that's a double bottom, right? I love the double bottom, right? That looks
Yeah.
good. So it's right at where it gapped down pretty much. And yeah, look at the face you're drawing there. Put a little hat, put a little
Yeah. We're not gonna talk about what else that might look like.
yeah,
Anyway, so it can go up from here. It's and the thing about it is when you look at my technical analysis stuff, all of this price action over here doesn't really matter anymore for my technical analysis stuff. This is all just corrective junk, and we found the bottom here, and this is where you work off of.
right.
So for me, I've got to move up, and potential start to a new trend. I need some pullback, confirmation, and continuation, and then I'd be more interested in it. For me, that's just the way I look at it, and I'm gonna wait till I have something established before I jump into it. I'm not a
Yeah.
while sometimes I will jump on early adopters and get into it, I usually like to have a pullback, have the bottom. I don't like to try to catch knives and pick bottoms because I've watched so many positions just get murderized.
That's why
Um,
I nibble. I nibble my way in. right? And if it doesn't look like it's going to pan out, then I just throw the whole thing out. I sell it all. But I'll nibble around. I'm already at a little profit, so a little more nibbling wouldn't hurt a bit. And then I'm just going to wait for the actual story to unfold because nobody really has a handle on this. Nobody has a handle on what Circle Internet's doing. It's too new.
Yeah,
Um,
this one did actually post some profitable numbers here, unlike Circle.
yeah,
Even though it was a small profit, it was profitable.
that's pretty amazing. So yeah, and that it's little cap, and yeah, I
And
like.
we are coming in here pretty steep numbers here. So we want to see their revenue growing in the coming quarters. Just, people are paying for forward performance since it is a new IPO. And just breaking it down, I do know all the fundamental analysis, and I'm sure Jack knows quite a bit about it, but it just doesn't work for me. As far, I like to see solid companies and then find the technical analysis stuff to trade.
Yeah, it doesn't work for me either. And that's why I say whenever somebody goes to look for a stock to trade, it's either through fundamental analysis or technical. Fundamental analysis, you got to read all this stuff, and from that, analysts predict a forward price. Technical analysis is not predictive, it's reactive, and that's what I like about it. I react by buying a stock.
And right now, it's pretty good, especially if you start nibbling right in here.
We'll see. Yeah, I'm going to nibble on a naked put in here. And I might even buy a little more stock. I don't want it to rip and get away from me like Hood did. I start buying Hood like 55. Yeah, look at that. And I didn't get my teeth sunk into it like I want to do on this one. I love that beta, man. I want to see that stay right there.
And we have a 2x leverage on this baby.
How about that? Fig X. All right. Who would have thunk it?
Let's see. I saw multiples of this, so I'm trying to find. Let's see if I can find them here.
ETF companies, man, they just can't wait to get, an IPO comes out and they're gonna leverage it and push out an ETF for it and collect the fees.
Yeah, they've got all sorts of. If you ever want to know, like, what are the other tickers? You just type in the one you're looking for, come on TradingView, click funds, and then you can start down here looking through them, trying to find the ones that might be interesting to you. You can invest in the bonds for Fig too. Looks like that's never mind. That's investment grade bonds. So gets to be some crazy stuff though.
Yeah, Pedro, you can't get them before the market opens. We need a little data on that.
So,
I don't know what the deal is with Fig, Ed, and I don't have a target on it because just like Circle, it's too new. It's too new for me to get a clear picture. Um, I'm just going at it because I'm liking some of these recent IPOs, like we've said, have been beaten up just because there's a lot of profit taking at first, but then you don't really get to see the whole picture. But a lot of them, like Core Weave, I mean, all of them, they've got a little bit more to them than people think in terms of potential.
so what happened? Altman used Figma integration in ChatGPT. That's so this is all kind of hype. Nothing's actually happened yet. Uh, so there you go.
Right. I didn't even know really what they did. So there you go.
All righty.
Yep.
Rolling through. Anybody got any last minute questions before we wrap it up here today? We're gonna wrap this up here in just a few minutes.
Fig and Circle are my total speculative plays. I'm not recommending anybody do it. People just want to know what I'm doing, so I'm telling you, uh, I'm going to nibble on Fig. I'm going to build up a position in it, and I'm going to start selling naked puts to add more, buy a little bit of stock, and sell a bunch of covered calls. And if it gets into a decent trend, then I'll add credit spreads, but no trend yet.
So one of the things, somebody asked me what makes a good derivative you could trade, and I need to see option volume. usually more than 10,000 options a day to really start getting the juice in there that I can trade.
Yeah.
So Fig, I don't know where it runs right now. We're not on a 52-week high or low, but you can actually go in and look at option volumes on the same market chameleon. Now this, there'll be lots and lots of data on here. And you just come into options, option volumes, and you come in here and start looking for Fig. And you can actually search for it if you want to. We can type her in here, see what we can come up with. Here we go, Figma Class A shares. And we can turn this on to show me the contract volume. Call volume, 86,000. Put volume, 47,000. So that kind of meets the 10,000, thing. 134,000 volume, total volume. Trade count, 22,000. So most people are trading quite a few, 5, 6 options per trade in general. So these tools exist. They're free to use. I'm not logged in. I'm not, anything up here.
They just help you get a better picture of what you could do and what you should do. Right? Just helps. If you
I
know
like
what to do.
Now, if you come in here and you find a stock that has less than 10,000 options, it's going to be one, you're probably going to get bad fills because there's not a whole lot of people playing in there. And there's not a whole lot of premium in there either. When you have a whole lot of options trading, that's usually a whole lot of options buyers. And if we're option sellers, that's good money.
The other thing you
That's
want to look at too is the difference between the bid and the ask, the spread. If you don't have a lot of action in the option, the spread between the bid and ask is going to be wide. That's a bad deal for you. If there's a lot of action in the options and they're just a couple pennies difference between the bid and the ask, that's a pretty good deal. That's a lot of liquidity, a lot of good fills. Doesn't take much to move it higher.
And when we look at Fig here, it's got 45-cent bid-ask spread there.
Pretty wide.
So even though they're, in the higher liquidity, they're not necessarily trading a lot today.
Not tight,
And
say, yeah.
you look at the volume today, you'd think with 11,000 options flying that it would have a tighter spread. And there's somebody pulling it up closer, 20 cents. So it just shrank by half. But it's also why you don't put live stops in the market because they spread these out
I was
and
just
come
going to
get you.
hit you. You put your percentage loss on there on a stop on an option. They'll drop the bid, leave the ask where it is, snatch your order, and
So,
sell it much higher. You never want to use a stop on a straight up call or a put.
and the market maker will sit there. I figured this out just watching it sometimes. Let me pull back over a screen where I can talk about it. Let's see. Do we have the options? This one doesn't actually even list the options yet on here. Fascinating. So let's say you put your stop, you got that one, you put your stop down at $4. You got filled to the mid and they spread that thing out to come down. So the bid is now down at $4, but they have another order sitting right up here just above the mid. They can grab your order and flip it into that order and capture that spread right there. That market maker can and make their money and be out. They're flipping it right away.
I did all the time. So what would you say that ask is? If you drop the bid to 4, right? Let's say the ask is 475. What I would do is I would drop the ask to 470. I just picked them off for $4. The ask is 475. I would be the new low offer at 470, right? So everybody would either have to compete with me or I'd be there by myself and I'd take that 70 cents. And then what I might even do is let's say the order is bigger than what I picked off at 4. Let's say I picked off 10 contracts or 100 contracts at 4. And I sell 150 at 470. Order comes in for more than I got. Now I'm going to go to 410 on the bid, right? And let that offer go back up to 475. And if I don't get filled, I'll go to 4.25. That's my game, man. I absolutely loved doing that. especially when you
We,
got.
we actually had a testimonial come in yesterday that said you had a special skill for this. Uh, I'm sure you were blushing in the background there.
was was blushing. I don't remember that guy. We got a message from a guy that remembers me from my time at Dean Witter at 5 Wall Street at the World Trade Center and on the 15th floor. I don't remember that guy, but he said, we always thought there was something special about you, but we didn't know what it was. And it's amazing to see what you've done. But he doesn't know all the bad stuff. I don't think he knows I got fired from Dean Witter. Uh, all that other stuff. He just sees where I'm at now, compared to back then. And
You know,
I was asleep in most of those classes on the World Trade Center. I was up all night partying in New York and sleeping all day during the classes. Yeah, that's
yeah.
crazy.
Now you're hanging out with me, and I've never even been to New York City.
Oh, man, we got to go. Yeah, we got to go. I'll take you up there when my grandson pops out. We'll go to New York City. It's good. I love it there. I love to visit, but I wouldn't want to live there.
Yeah, I've heard the delis up there are amazing.
I was gonna say the food, man. The food is unbelievable. And if you like having custom suits made, and you like really cool men's shoes, wow, that's the place for custom suits and killer shoes. Yeah, for men, good fashion stuff, good food, and fun to meet a lot of people, you know. But it's way too crazy. I can pretty much see my son's apartment building, and it still might take me 40 minutes to get there in the cab, you know. Nuts.
Yeah, I'll just walk over there.
Yeah. Yeah.
So I was talking about my system earlier. Here's the proven win rate through mid-September. We got a few more trades in it now. Right here. If you want to know more about this and sign up to join us live on Sunday, here's the link one more time, everybody. Post it in here.
Can't wait.
Come register. Jack and I are going to go live with this thing. We're going to talk all about it, answer all the questions.
I got a lot of questions, got a lot of comments I want to make about it. But yeah, we'll be there. Be there, be square. That's going to be hot Sunday. You won't have anything else going on Sunday. What time is it on Sunday?
1 p.m. Eastern,
1 p.m. Eastern time.
12 p.m. Central, 11 p.m. 11 a.m. Mountain Time,
That's
10
my
a.m.
mountain.
Pacific Time.
So if you like, right after church, yep, Pedro. So yeah, if you like having spoon-fed trades, spoon-fed to you, you're gonna like that.
There you go. What average? They're 1 day trades. 1 day. 1 day to expire.
And I don't have anything going like that. That's why I'm so excited to add this to my arsenal of strategies.
All right, everybody. That's going to be it for Market Masters today. Thanks for joining us. We'll be back with you again tomorrow for another
Yeah.
Market Masters. Make sure you come and join us once again. We'll discuss
Friends,
more trades, more ideas.
tell your friends we got a surprise tomorrow.
Have a great day, everybody. We'll see you later.